Welcome to part 3 of the video. In this, we would be talking about Indian capital markets, loss making stocks in unlisted market. And here I would like to raise two pertinent questions, of course, with facts. Number one, Byju's. Number two, PharmEasy. Paytm, Zomato, Nikea, and Policy Bazaar. The four companies who got the approval and they raised the money from the markets. As we speak, 1.4 lakh crores. You heard me right. 1.4 lakh crores worth of loss has already been booked. By the way, this figure is not the updated one because if I compare the current market price, then this figure is more than that. But the base figure as we speak is at least 1.4 lakh crores, which is the largest trading scandal we have in India. 1.4 lakh crores. And the very interesting fact is it is because of the approval by the regulator towards the loss-making startups. I have already covered this in a detailed manner. You can see the videos on the Facebook. Probably after editing, you will see on our YouTube channel, which might be taking 2 to 3 weeks of time, as this video in itself more than 2 hours video. But when we speak about API Holdings, which is a parent company of PharmEasy, and Byju's, not only the aforesaid fact comes into the picture, which is they are loss-making companies throughout, but the very important fact which comes into the picture is the acquisitions. Now, what the hell is this point? Acquisitions means you incorporated a company. Now, let me give you the facts. The fact is, which I have taken, Siddharth Shah, Dhaval Shah, Dharmil Seth, Harsh Parekh, and Hardik Dindia in 2015 founded PharmEasy. I am not saying this. This article is saying this, which they conceived as an Indian Amazon in healthcare delivery. So I would like to compare the word Amazon. I remember in 2018 and 19, there is a word called disruption that was highly prevalent in Singapore at that point of time. Every conference, every webinar, every seminar, there is a word called disruption. Now, which effectively means that these startups are here to disrupt the existing eco-culture. Rather, today I was watching the interview of Mr. Mukesh Ambani, and he was also referring to a fact that the young entrepreneurs can get this job in half time. But one thing I fail to understand, none of the young entrepreneurs able to make a profitable company. That is also a very interesting fact. And I think Mr. Mukesh Ambani forgot to mention this. So this company founded in 2015 by the respective individuals. So there is a word called disruption. In 2018-19, this word was highly prevalent in the system. Now, highly prevalent in the system means like in every conference, people were using this product. Disruption, disruption, disruption. And now there is a word called Amazon, which is highly prevalent in the system. Every company which incorporates in India, funded by the venture capitalist, they add one word before this company, and this one word is nothing but disruption or Amazon. Every company in India, as far as the venture capitalist and private equity space is concerned, whether this is Paytm is Amazon of digital space. Zomato is FMCG or Amazon of FMCG. So Amazon is a word which everyone adds. Irrespective of knowing, I repeat, irrespective of knowing the fact that Amazon is 100% profitable company. Not only 100% profitable company, rather they trade over $3,000 per share. Their counterpart Apple, who is also a very big company by the way, who holds near about 250 billion, I repeat, 250 billion dollars of cash, they trade near about 170 to 180, while Amazon trades 3000 plus. Goldman Sachs trades near about 340, 345, who holds a trillion dollar asset book, trade near about 339 to 340, something like this. JP Morgan Chase trade much lesser. Bank of America, Citi. So you comparing yourself with Amazon, who is beyond expectation, it means that you started your comparison with Lord Shiva. You started your comparison with his powers, which are, except Lord Shiva and Mata Parvati, his wife, no one is exactly aware about the powers of Lord Shiva. No one is aware. People have clue, but no one is aware. Like if you know the sea, you might not end up knowing the depth of the sea, but the only thing you know that sea is very, very deep. And this is what all about Lord Shiva, right? So similarly, you have started comparing your company with the Amazon. And this unique word I am finding almost everywhere. Every loss making startup in India is comparing himself with Amazon without knowing the fact. So now the question is, the current stock price of API Holding, which is a parent company of Farm Easy, it is about 76 to 78. 76 to 78, which means it was 108, it went to 140, and now 76, which means near about 45% of depreciation. But the fact, please understand this. A company who founded in 2015, that company bought a listed company. So an unlisted company, unlisted loss-making company is buying a listed profitable company. So India has reached to a level when an unlisted loss-making company funded by venture capitalist and private equity, they have started buying listed profitable companies, and interesting fact, they always get the approval. In June 2021, API Holdings bought listed diagnostic company Thyrocare for 4,546 crores. API picked 66% stake in Thyrocare for 1,300 rupees per share. Now this 4,546 crores must be routed via RBI. Common sense, because this huge money cannot be credited in an account until you have RBI permission. Did RBI ask the unlisted, I repeat, unlisted loss making startup who is funding you? Did RBI ask this unlisted loss making startup, what is the actual intention of funding a company? Did RBI is comfortable with a situation that a unlisted loss making company is buying a listed profitable company? Please think about these questions. This is called precedent. In English, it is called precedent. By precedent, it means we are setting up an example. The day first corruption had happened in India, if India handled this in an efficient way at that point of time, today India might be a very good corporate governance country. But end result is today even national stock exchange is not secure. This is the end result. Now this is called precedent. We once again setting up a wrong precedent in the system whereby we are inviting the venture capitalist and the private equity firm to come raise a stake in a loss making company and then started buying profitable listed companies. Take my video as an example, because what I said in 2018, this precedent would be costing investors dearly. This precedent would be costing investor dearly. Like when I raised my voice against Paytm, Nikia, Zomato, and Policy Bazaar. But it took me near about 3 to 4 months and the stocks corrected heavily. Car trade. Just wait and watch. This precedent would be costing you extremely heavily. See you in the part 4 with more updates, more numerical analysis. Have a great time ahead.